Did you know that despite accounting for two-thirds of India's population and nearly half of its GDP, rural India accesses only 9% of the bank credit? Did you know that 10 years ago, 25 crore women did not own a bank account? Today, they do. Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. As I explained in the introduction, one of the most dramatic takeaways in the last decade has been India's ability to bank its people at a staggering scale. This is especially true for rural India in general and the cohort of women in particular. What this has done is it has opened the door for these newly banked people, especially women coming from low income households, to access small ticket livelihood loans from formal sources of credit. Microfinance institutions have sensed this opportunity and seized it. They are making deep inroads into this segment of the money lending business, especially in competing against informal sources of credit like money lenders who offer usurious rates of interest. To unpack this trend, I spoke to an industry insider, Sadaf Sayeed. He's the CEO of Muthoot MicroFin. They are the third largest lender in South India. I began by asking Sadaf as to why his company chose to address the riskiest cohort, that is, women belonging to low income households in rural India.
I think as a group, our focus is to serve the common man. And the idea is to provide financial services at the bottom of the pyramid to people who are needy and underserved or unserved. So I think that's why the target segment for us is economically weaker section of the society, and more specifically women groups. So our business model is based on the Grameen model of lending. It is kind of Grameen Bank in Bangladesh had a similar model, but that was more SHG led. This is more JLG led. So we form a group of ladies, 10 to 15, and we give loans to them. So to answer to your specific question, we found that women borrowers are more credit worthy. We had, and this is a learning for the industry for many years, almost like 4 decades. We have seen that when you lend to women clients, they use the money more productively. Say they use the money for betterment of the life of the family, for uplifting the living standard, for health and education at home, and they usually don't run away. So that's the learnings that we have, and that's why our focus is on a woman borrower. To make an impact in the society, I think if we uplift a woman of the household, definitely it will have a larger impact on the entire household and all the members. So that's the aim.
Interesting, because normally lenders don't lend to women because they don't have collateral, and the whole social structure in India is such that assets are in the name of the men. So you're actually moving into totally uncharted territory, right?
Yes, absolutely. Yeah. So our loans are collateral-free loan. The only collateral is the social collateral. That is the group guarantee. That is 10 members who are jointly joining the group as a joint liability group. They take each other's responsibility and guarantee. But apart from that, there is no physical or asset type collateral that is there in our business.
So when you say they take a collective guarantee, that means they guarantee each and every member of that lender group, right?
Yes. Yes. So the group formation is like you and your friends collectively neighborhood. You join together to take a loan. on easy terms. So say example, a 10,000 rupee loan, which you will pay over a 52-week or say 12 months. And all of you get 10,000 rupees each, and you collectively pay that money on a weekly or a monthly basis. And any one person who fails to pay the repayment, the other people pitch in. So that's the social collateral on which is the basic foundation of microfinance business.
So, Sadaf, you did broadly explain what the consumption need is that is being addressed through your company. Can you just elaborate that on a little more?
So essentially, our focus is on income generating loans. So all our loans are given to small entrepreneurs, people who are engaged in small businesses. For example, somebody is running a small kirana shop, somebody is doing a vegetable vending business, somebody is milking a cow, or somebody is doing some chicken farming. So small businesses, somebody is doing a tailoring job at home. So small businesses that they are running, we give essential capital for this, ranging from 10,000 to around 80,000. Our average ticket size is around 57,000. Basically, because these loans are for productive purposes, we ensure that we do a loan utilization check also, that the money has been utilized for the intended purpose. So if somebody is saying that I'm taking this loan to buy a cattle, so we make sure that we go and see that there is a cattle which is added in our stock. And also, if somebody says that I'm taking this loan to buy a swing machine, so we go and see after a month that whether she has a swing machine or not. So these loans are essentially for productive purposes. These are not consumption loans, so to speak. They are income generating loans.
Interesting. Okay. This, just wanted to take this further. How do you incentivize borrowers to join your microfinance setup, particularly because most of them access their funding through informal means, which are largely hand-me-down, so it's a social network, right? So, but they are at pretty sharp, high interest rates. So how do the rates that you offer stack up against the existing informal sources of credit?
No, that's a great question. Actually, the whole premise of our business model is based on creating access to finance, and access to finance at a reasonable rate which is affordable. And of course, this is to be compared with the rate which is available in the market. So traditionally, places which are not financially included, uh, the borrowing that there happens from a local sahukar or the money lender, and those borrowings are at a very expensive rate. Plus, the borrower has to pledge her house or her ornaments or whatever she owns. And there is a like strong arm tactics also if they are not repaid. I can give you an example. There is a concept of in vegetable vending business called a meter loan, where in the morning a borrower comes and borrows 10,000 rupees to buy the vegetable, and while they take a loan of 10,000, they get in hand only 9,000 because the interest is taken upfront. And by the end of the day, by 5 o'clock, they have to return that 10,000. And if they don't return that 10,000 at 5 o'clock, for every hour, 100 rupees penalty is paid. So if you calculate that, leaving aside the penalty itself, it is kind of a 3,650% kind of an interest rate loan. Whereas what we are providing is an easy loan, which is for 24 months, 50,000, 60,000, which they can pay in equally equated installment at a rate which is ranging from 18% to 22%. And borrowers can easily borrow this money by just giving their basic KYC and forming a joint liability group. So that's the easy term, and we don't do any sort of harsh collection. Only soft collection is done. That is also because we have 99% repayment on time. We don't really have to do any sort of strong arm tactics or anything. We operate with customer centricity. complete transparency, and with an intention to provide services at easy and convenient format. So that is what attracts these groups to us for borrowing loans.
That means this is a segment which has long been ignored. Secondly, women in general have completely been ignored forever. So both are getting addressed, and that too at an industry level. Fascinating, right?
Yeah, absolutely. I think it's very, very impactful, and I think something that has been missing for a very long time. And in a economy like India, if we have to become a 5 trillion economy, or maybe go on to become a 40 trillion economy, the women participation into labor force and women participation into economic activity is very important. And in that regards, microfinance plays a huge role. As an industry, today we cater to around 7.5 crore customers. So that is 7.5 crore entrepreneurs. And the asset under management for the industry is around 4 lakh crores. So, and that is the AUM. So much more amount of money is going into this ecosystem and creating work, creating productive employment. So definitely that's a huge impact, and especially it empowers women, and it also helps them become a participation in the household decision making. So which also helps them. And our firm belief is, and it's a saying, that if you educate a person, you educate a person, but if you educate the lady of the house, you educate the entire family. So I think that's what we are trying to do: liberalize and educate, and also empower the female at the household, which will definitely empower the family at the bottom of the pyramid.
And Sadaf, right at the beginning, you had said your loans are unsecured. So how do you as a company mitigate the risks associated with such lending?
Yeah, so the fundamental principle of risk management here is ensuring that we have a joint liability group. So all the people who are a part of the member of the group are knowing each other, and ensuring that they have taken a due care in selecting their partners in the group, so that because they are taking the responsibility of their repayment. Apart from that, we have credit evaluation, which is done by our team. They underwrite and they understand that what is the business and what is the cash flows of these customers. Third aspect is we have a very strong credit bureau. So we check the credit history of these customers, and whether they have been a defaulter in the past, or any sort of history of default that is there. And based on all these three, we also do a scorecard, which is unique to our operation. And based on that, we decide that whether we need to lend to this customer or whether we should avoid this customer.
So if I can just do a quick follow-up, you said the credit bureau maintains the credit history of these your clients, which means they have a lot of database on their cash flows and outflows. So, you now have this account aggregator framework who are acting as data intermediaries. So, do you see in the future this database being leveraged for, upping the uh, ticket size of their borrowings?
Yeah, definitely. I think microfinance credit bureau space has been in shape for a decade now. And this is the only credit bureau space where data reporting is on a daily basis. Even if you look at the consumer loan database, it gets reported only on a monthly basis. But in a microfinance space, all the MFIs, almost I would say 70% of the MFIs report almost on a daily basis, and almost 100% report on a 15-day or a weekly basis. So the database is quite rich. Apart from that, as the aggregator database is getting enriched and as it is evolving, we will have a lot of information about the customers. So Credit Bureau provides the records of the past credit history of the customer, whether she has been a right kind of a paymaster or not. But aggregator can also provide the data in terms of what are the inflows, like what kind of saving she has, what kind of investment she has made, or what kind of subsidies that she's receiving from the government on a monthly basis. So that can really enrich that underwriting process. And in our credit evaluation process, the scorecard that we have built with this thought process that in the long run, we will definitely look at all of these aspects. The aggregator info will become another data point for us to evaluate the creditworthiness of the customer.
So, what is the delinquency rate? You did mention that it's not very big, but what's the percentage that you experience, and how does it stack up against, say, the industry average?
Yeah, so despite all the impact of COVID, the lockdown that was there and moratorium that was there, our GNPA today stands at around 2.29%, and our net NPAs are 0.33%. And if you look at the disbursements that we have done post-COVID, that is second wave, that is July 2021 onwards, the repayment rate, the NPA rate is 1.2%, and the repayment is 98.4% on time.
Is it also due to the fact that access to basics, like toilets, electricity, drinking water, have expanded pretty dramatically in the last 2 decades? So, is that also, when you acquire these basic public good assets, access to them, it also improves your chances of improving your livelihood? Is that
Yeah.
also playing into this?
Absolutely, absolutely. I think the social infrastructure has really improved. At least a family which is having a ration card of some sort is not dependent or cannot be starving. They can at least get 2 square meals and they can get the ration. So that is there. So from that, social security net is pretty nice. And now you have a lot of such scheme where subsidies directly come to the accounts of the customer. Jandan and Aadhaar has ensured that everybody has a bank account and linkages, so they are able to receive money. Thirdly, there are good social security scheme and insurance scheme like Ayushman Bharat. So if there is kind of an emergency, medical emergency, they still have some sort of a cover. I'm sure there is still scope of creating awareness and education, but there is enough and more social security net that in the last decade or so has been built, which makes these economies a little bit more resilient and helps these customers improve their living standard and improve their well-being.
See, I can't help making this observation. Seems like a win-win situation. You invest in these schemes which improve their livelihood, improve their prospects, and strengthen their economic basis, which in turn mitigates the risk even further. So it's like a win-win situation for you, right?
Yeah, absolutely. I think we grow with the growth of the society. The more we help the customer come up the curve, the better is our business and repayment rates. And that is what we focus on, that we have to ensure that the customer gets what she needs. And at the same time, we help her improve her living standard, her livelihood. We not only do loans, we do financial literacy program, we do entrepreneurship program, we do digital awareness program. So help them kind of improve their businesses and the way they are conducting business. So we have a very extensive market linkage program where customers who have a business but do not have a market linkage, we provide market linkage to them. So I think you hit the nail on the head. Basically, the better the customer do, the better our repayment rate are, and better we are able to do as a company.
There's so many things about India that are transforming, that too in a fundamental way. A lot of this has to do with the enabling of universal access to basics. Take, for example, the fact that over the last 1 decade, India has banked over 25 crore women. What this has done is to create the wherewithal for these women, if they so desire, especially in rural India, to access livelihood loans from formal sources of credit. From our personal experience, we know how consumer loans can be a means of improving our livelihood and thereby our standard of living. Take for example, a plumber, a carpenter, an electrician taking a loan to acquire a two-wheeler. This could dramatically improve their productivity. Why? Because now they're able to cover a larger geographical area and hence earn that extra income. From our conversation today, we know that microfinance institutions alone have given such small ticket livelihood loans to 8 crore people.
Yeah.
Effectively, this is equivalent to lending to 8 crore households. Remember that this is about a third of all the households in India. Cumulatively, as these socio-economic benefits stack up, the transformation is likely to be profound, rewriting the rules of society as it were. Thank you for watching. Don't forget to subscribe to Start News Global and hit the bell icon so that you not miss any updates. And please do share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital. I'll be back next week with another episode. Till then, stay safe and good.